To talk about, because there's been lots of news that's going on in the mutual fund world, but I'd like to start off by getting a sense as to what your outlook is on the emerging market fund flows, because we have seen that it seems that the April full outflows this time around could be closer to $10 billion, but the outflows from India have decreased quite significantly. It is just about $0.5 billion in the month of April versus nearly $8 billion in the month of March. What exactly are the kind of trends that you're looking at, and what's the story when it comes to liquidity in India?
Thank you. And first of all, I hope all of you are safe and sound in your homes and in the studios. So on the whole outflows from emerging market situation, there's a lot of this diversity that we are seeing across emerging markets. So the first leg, if you may call it, for the Q1 that we saw countries over in Asia that were under the knife for the whole COVID-19 situation, and things were deteriorating over here. And so as a consequence, we saw markets going down. We saw a lot of outflows happening from these markets as well. Now I think, although the April numbers appear to be suggesting that, okay, perhaps outflows are starting to slow down and things are improving, but I think there's a little more storm in store for us, because coming as of Q2, not only is COVID-19 cases surfacing in Latin America, but we've also seen the shock to energy prices, in particular to oil, that has come, that is going to put a lot of pressure in a lot of emerging markets over in Latin America side as well. For India, on the whole, the situation looks slightly better because of the fact that they're likely to see a windfall from these declining oil prices that we are seeing right now, and it's going to help them curtail some of their external deficit. But having said that, as you know, India still has a twin deficits, both on the fiscal side and on the trade side as well. And even GST collections have been down, 8% year on year. And with businesses closed down right now, GST collections will likely take a hit as well. So there are all these challenges, which mean that at least on the fiscal side, although there's a great need to expand the fiscal deficit, it's going to be a bit of challenge for India, and this is what foreign investors will be watching out for.
Okay, so how does India stand then vis-a-vis the other emerging markets at a time like this? Is there a growing chance of seeing some sort of a stronger value and an emerging market rebound?
So we can roughly break up all these emerging markets into two groups. One are those emerging markets which have got good fiscal and trade surpluses, which means they have a lot of room to navigate this difficult market environment that we are going through right now. And then the other set of countries are those which have deficits on both the fiscal and trade side, and both of which may end up increasing given the situation right now. Now, India, I would say, is somewhere in the middle because the fiscal deficit, yes, they have that, and it's likely to expand further. It's around 3.3% of GDP right now, likely to go up north of 5% as the government has to step in and provide support for the economy. On the trade surplus side, yes, that has been coming down compared to over a 12-month year-on-year basis. Come down from around 15 billion to right around the 9 billion mark. And this deficit will likely go down because, like I mentioned, the windfall that we are likely going to see on the oil side as well. But on the whole, what's standing out for India are essentially two factors. One, that despite all the negative downgrades for economic growth by IMF across emerging markets, India is still one of those economies that is still projected to grow for this particular year, despite all the challenges that we are seeing. The second thing is there could be some positive, there could be some kind of a positive benefit to India arising from the fact that developed markets may start thinking about how much their economies are exposed to supply chains in India. And if there is a pivot away from China, that India is definitely the next biggest market that can absorb that kind of scale and can step into, to provide greater support to global supply chains, and that could be a positive driver for the economy going forward. But as I mentioned, on the negative side, we have this whole issue about can the government sustainably raise tax revenues and make sure it's able to keep the fiscal deficits in check. And so it's going to be a wait and watch situation. A lot of investors will be looking at how the earnings start coming in for Q2 as well for different companies, and then we'll see how the situation goes on from there.
All right, fair enough. Mohammad, wanted to get your views then on the big headline this morning, the Franklin Templeton Mutual Fund voluntary winding up 6 of its fixed income debt schemes. And, they have been on a conference call, they've explained the rationale, and you've got a lot of retail, HNI and corporate investors who've parked their money in these debt funds. Just give us a sense as to how you're reading into this kind of a news, because clearly with inflows having, reduced significantly, they're of the view that it's no longer possible for such schemes to generate liquidity for redemptions. Do you think that this is the start of, some sort of a trend that we'll see in the mutual fund industry? And, what's your view on how the situation really has played out when it comes to retail investors in particular?
So I think generally across the board, when it comes to fixed income, especially the high yield side, that has been under stress. Even on the hedge fund side that we have been tracking, if you look at structured credit hedge funds, they are down almost 20 to 24% for quarter one this year, which is one of the biggest losses since the 2008 financial crisis. We look at some of the high yield investing fixed income strategies as well. They've been under pressure, high single digits to double digit losses right now. On the India side as well, and the example that you mentioned on the mutual fund side as well, there's of course this concern that there's the value of the underlying holdings is likely going to be going down, and then from a foreign investor perspective, there is also this concern about how the currency is going to hold up against the US dollar given the volatility that we have seen. So it's going to be a bit of a challenge on the side, and like I mentioned, the next 3 months are going to be critical. There is more and more testing going on in India right now as well, so that's going to really show us exactly how bad the situation is on the ground as well. And from the foreign investor perspective as well, it's a wait-and-watch approach to see exactly how deep some of these cuts are going to be earnings in light of what is happening in the markets.
Right, we'll let you go on that note.